Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Hope you guys all had a fantastic weekend. There wasn't a whole lot of news scheduled for this morning, but that hasn't stopped us from having just an absolutely massive down day. After the way we closed last week, maybe not a total surprise. You knew that there was going to be some headline risk heading into the weekend, and right on cue. Overnight, we had just some retaliation after like the tariff tweets last week. So, it's like deja vu all over again, as Yogi Berra loved to say, right? I mean, we've seen this happen before. We know how it ends. Either there's going to be a continued escalation, a continued drop in the market, or there's going to be some sort of walk back on both sides, and everybody's saying they're making great progress and things bounce. But with headline risk very, very high at the moment, that means that the VIX is elevated, right? And we went from a period of really steady grinding, trending, right? Most of July was just a really steady, low volume trend higher. Now we're getting like massive ranging days, like 4, 5, 6 point days. And what works in July is not necessarily going to be working right now, okay? And in July, when it's you're in those trends, like a lot of like the trades, like the sweet spot I say is like 2, 3, maybe like 4 weeks. Like that's the sweet spot for the time frame for option swings because you're not in huge ranging sessions, right? The volatility is a little bit higher. Trades take a little bit longer to like set up and play out, so targets are take a little bit longer. But at the same time, the option prices aren't as aggressive, right? Because the overall volatility is lower and the ranges are tighter. So 2, 3, 4 weeks, those are like the time frames that I call the sweet spot when you're in a trending tape. But now when you're in this really high volatility environment with like less visibility for like a day-to-day move, that changes, all right? And what I find works is either very short-term contracts, so like a week, maybe like a week and a half, or longer dated contracts, so like a month and a half to 2 months out. And let me explain that real quick. So um, low visibility, right? So you basically, I mean, some days, especially like a day like today, you might only have visibility for like an hour or 30 minutes or 2 hours, right? So it's kind of tough. It's kind of tough to see like a few days out or a week out. So um, like your time frame is going to be much shorter. Your holding period is going to be much shorter, right? So like the near term, maybe like weekly or even like maybe like 10 days out, like that's going to be like a contract that I focus on a little bit more just because my holding period is going to be so much shorter. Yes, the implied volatility is going to be a lot higher, but at the same time, implied volatility on the contracts 2 weeks out is going to be high as well, and 3 weeks out. Implied volatility just across the board is going to be a little bit higher when you hit these types of periods. But if your holding period is only short, then you can look at possibly these really short-term contracts because you're only planning on holding for a very like short period of time. And on the opposite side, right, longer dated contracts, right? The reason why you can focus on those. So if you're looking maybe for like, you say for instance like Amazon. So I had NOW, which I'll talk about in a second. But Amazon coming down to 200 day, you're saying like, all right, Amazon hit the 200 day last time, had a really sustained rebound, like maybe like a month out. So I want, a slightly longer term swing. So you probably want to look maybe like a month and a half to 2 months out because the further out you go, the lower the implied volatility is going to be, right? So it's going to smooth out some of that really sharp near-term implied volatility. So, if you have like a slightly longer preference, right, or a slightly longer time frame, then pushing the bet out like 1.5 to 2 months for the contracts is going to help smooth out some of like those really expensive near-term options, right? Like for NOW, that's why like the recent trade idea was out through September. It's because yes, it's in a pretty well-defined trend still. It is breaking below the 100 day today, but what I noticed was the last couple times it hit the 50 day, it had really quick bounces, right? Really quick bounces. So even though it has in the past had pretty quick bounces off the 50 day, just recognizing the overall environment lines up better for a slightly longer term swing. So like that's why the contracts are pushed out through September, main monthly expiration, September 20th, instead of doing something like very, very short term, right? So things are developing fast, and I've talked about this in the past. We've talked about this in option sessions before, but it's just like a great thing to go over when we hit these types of periods. You have to be constantly adjusting your style to the overall market. What worked again in July, probably, I mean, at least as far as Argus is concerned, is they couldn't be any more different. It went from like a no volatility trend to like a crazy volatility, just straight down move. So, you got to adjust your targets, adjust your style, and adjust time frames. Right, that's what's going to be really really important in this environment. Still plenty of earnings to look forward to this week. Maybe not super high profile names, but Disney got plenty of software names, energy, a bunch of new IPOs like Uber. So lots to look forward to. On a programming note, our option session, it won't be this evening. It's going to be tomorrow, Tuesday after the close. So I hope you guys can all make that. We have lots to talk about, especially after last week, right? Just absolutely wild. So lots to cover. So hope you guys can make that. All right. So hope you have a fantastic night. Best of luck if you're playing anything, and I look forward to speaking with you guys all tomorrow. All right. Have a good one.